Gold is tangible and has a long track record. For thousands of years, cultures have embraced the shiny metal, but in our modern world, gold is a terrible investment. History books show that the precious metals improve trading. Some of the oldest coins date back to 500 BCE, but their relics and even modern gold coins are going the way of the dodo. With the research I'm about to share, I'm going to show you exactly why gold has been and will continue to be a terrible investment. On top of that, you're also going to find out why I no longer personally invest in gold mining companies, silver mining companies, and other precious metal mining companies. To be honest, there's a much better place you can put your money today, and I'll share that as well. But first, I'd really appreciate it if you tap that like button down below, as well as hit subscribe. Now, why is gold a bad investment? Businesses pay a lot of money to dig gold ore out of the ground. They then refine it, and then they pay to keep it safe. All the while, it produces nada, zilch, nothing. This is one of the top reasons I avoid buying gold. And here's a more thorough list of 6 reasons. So first of all, gold doesn't produce any income. 2, dealers charge fees above spot price. 3, storage and insurance costs eat away at returns. 4, gold lost its currency status and has little utility. 5, it's a bad short-term inflation hedge, contrary to popular belief. And 6, my favorite, gold will not save you during an apocalypse. I'll cover a little bit more of those here in a second. Gold is worse than a no value added asset. It sucks away value over time. There are a few caveats for the short term when investing in gold, but timing the market is a fool's game. Many people buy it in hopes that another fool will buy it for more down the road, aka fool's theory. All right, let's cover quickly a brief history of gold. King Henry VII ruled during the creation of the first sovereign gold in 1489. Then a few centuries later, the UK linked its currency to a fixed amount of gold. And by 1900, most of the world had followed suit by adopting a gold standard. During the First World War, countries abandoned the gold standard and moved to a fractional system. This allowed the countries to inflate their currencies and pay off debts from the war. But that currency manipulation wasn't sustainable. After the Second World War in 1944, a new gold standard took root with the Bretton Woods Agreement. The agreement pegged other nations' currencies to the US dollar. Anyone could then exchange $35 for an ounce of gold. But alas, that system didn't survive either. In 1971, President Richard Nixon suspended the dollar's convertibility into gold due to the inadequate US gold supply. By 1973, Bretton Woods collapsed and countries entered into the modern fiat money age. Governments now command the value of their currencies. A dollar has no intrinsic value and the economy survives on trust. The word trust shows up on your dollars. Buying gold is a way to limit government control. This is a major selling point for gold investors. That's one reason I bought gold back in the day, but the cons outweigh the pros. All right, back to one of the points I made before. Does gold hedge inflation or hedge against inflation? Let's dig into some of the facts. Gold coins increased in value by 704% from 1950 to 2000. And in 1950, $1 had the same buying power as $7.18 from 2000. That's a 618% increase. So yes, gold is an inflation hedge over the long term, very long term. Gold hedges against inflation over many decades, but in the short term, it's too volatile. Instead, you can use Treasury inflation protected securities, aka TIPS, to maintain purchasing power with lower risk. And a far better option is to invest in the stock market. The S&P 500 returned 8,345% from 1950 to 2000, the same time frame that I just gave you before. With dividends reinvested, the return skyrockets to over 54,000%. I'd take that return any day over gold's measly 704%. Now, some gold bugs still might be sticking to their precious metal at this point. They might argue that gold would help them survive a doomsday scenario. But will it really? Let's break down that logic. The probability of seeing a doomsday collapse in your lifetime and gold turning into a top means of trade is close to zero. But let's entertain the idea. All hell breaks loose. A catastrophe destroys the money system. But good thing you've got that gold stored in your vault. Oh wait, no one wants your gold during a doomsday scenario. Food, ammunition, and medicine are the real currency. Instead of stashing $100,000 worth of gold, you could have built a fully stocked safe house and rented it out on Airbnb to make some extra income. Then during a complete collapse, you can trade a few of your extra MREs, meals ready to eat, for more gold coins than you would have started out with. All right, you've made it this far, and the evidence is in. Gold is a terrible investment, but how about investing in gold mining companies? I think a quote attributed to Mark Twain sums it up. A gold mine is a hole in the ground with a liar on top. That might be why penny mining stocks used to be a favorite for pump and dump schemes. Nonetheless, let's look at some more reputable gold mining stocks. One of the oldest gold mining funds I can find is the Van Eck Vectors Gold Miners ETF. The ticker is GDX. It's a global market cap weighted index that started in 2006. And since then, its shares have dropped 42%. But over the same time frame, gold is up more than 90%. This result rhymes with other gold funds, so I'm staying away from gold and the mining industry. That's unless it's through direct employment. I hear gold mine operators can make a pretty penny. In conclusion, I've invested in silver and gold coins in my early days, but for the reasons I've listed today, I'm avoiding doubling down. Gold is a terrible investment when compared to income-producing assets. I'll stick to dividend-paying stocks. Not too long ago, I bought shares of AT&T when it had over a 7% dividend yield. I'll include a link to my initial write-up along with my top 10 dividend stocks to watch in the comments below. Do you have any unique gold research or comments to share? I'd really appreciate any feedback. Please reach out anytime. And also I'd really appreciate it if you tap the like button down below as well as subscribe to my channel. If you want more unique research, you can check out these right here. And otherwise, enjoy the rest of your YouTube streaming.